Next, we have Thomas Schumann, who's principal of Thomas Schumann Capital, which provides financial and investment solutions for water security. Thomas, please tell us your story.
Thanks, Tim. Good afternoon. So my name is Thomas Schumann, as you mentioned already. I have a purpose-driven mission and investment solutions that are the underlying, which is to advance water security, United Nations Sustainable Development Goal number 6, which is sustainable management of water. Thomas Schumann Capital created and licenses the TSC Water Security Index. It's the world's first benchmark index family for water stewardship and water security to global capital markets. So the question is probably now, why water? Since we're on a carbon and climate panel, 9 out of 10 of the worst global risks are linked to water. That's according to the World Economic Forum. Water represents, in my view, in my opinion, been in that space now for 10 years, the single largest risk and investment opportunity for people, planet, and profit. And why do I say people, planet, and profit? Because, congregating here the Wall Street Green Summit, it's all about the triple bottom line, which includes people, planet, and profit, and specifically that order of priority and not profit first anymore. And this is obviously going through a transition from shareholder capitalism to stakeholder capitalism. What is the relationship between climate and water? Very, very obvious. Climate actually is water. Climate expresses itself through water. So we see floods, droughts, water stress, contamination, excessive precipitation, for example, atmospheric rivers discharging themselves. We have changes in biodiversity, aridification, which is actually the permanent state of drought versus just drought, which comes and goes. So people and businesses can survive high carbon environments. They cannot survive, they cannot thrive without access to water. So UN SDG 6, Sustainable Management of Water, is the foundation of all other 16 Sustainable Development Goals. Water is life. What can investors do to integrate water into their portfolios, investment decisions? That's probably a question that's coming up. Global capital markets are just starting to understand that environmental risk is triggering the great repricing, as Jeffrey Gitterman asserts it. So investors only now begin to price environmental risk into equities, asset classes, investment decisions. Water risk affects all asset classes. Historically, global capital markets have only understood risk in the context of financial metrics. And given the fact now that we're in a new paradigm of climate change and water stress, there's utmost urgency to change this paradigm. And luckily, what's going on currently with the SEC, there's silver lining, and I hope that the SEC moves very fast on the mandatory disclosures of climate risk by corporates. Another gentleman, other than Jeffrey Gitterman, who I consider the godfather of ESG on Wall Street, other than Peter Fusaro, is Richard Sandor. And Richard Sandor is considered the father of financial futures. He asserted in 2012 that the next financial revolution will be in the convergence of the financial markets and the environment. And let me repeat that again, because I think it's really, really pivotal. The next financial revolution will be in the convergence of the financial markets and the environment. And this is actually happening now. That's what we're seeing. And that's, all supported by ESG, sustainable finance, responsible investing. Dr. Willem Buter, who is one of the advisors of my firm, he's Citi's former top economist. He's a world-leading academic from Columbia University.
We might have lost Thomas there for a second.
Is in the index series.
Thomas, you cut out with Columbia University. Whoops. It's like he's freezing again.
Solutions that we have for global capital markets. So the index series that we created, it's called the TSC Water Security Index. There's a global version, the US version, and a Euro version, and they represent the new benchmark for integrating water into equities, into portfolios, investment allocations. None of the existing index providers, the big three or big four, MSCI, Bloomberg, FTSE, and S&P have yet considered water, and for that fact, also climate, as a risk in the equity indices. So all of these indices I consider are outdated versions. Our index family delivers above market rate returns while having a 50% lower water.
Thomas, I think you're frozen again. I don't know if you can hear me. Thomas, Thomas, can you hear me?
Yeah, I can.
You were cutting out a little bit there. Maybe you could go back.
Yeah, sure. Yeah. So the solutions for global capital markets, the TSC Water Security Index comes in a global US and Euro version, and they represent the new benchmark for integrating water into equities, into portfolios, investment allocations. None of the existing index providers, be it MSCI, S&P, FTSE, Bloomberg, to name a few, have yet considered water as a risk in the equity indices, and that goes also for climate. Our indices deliver above market rate returns while having 50% lower water and 25% lower carbon footprint than the MSCI World, S&P 500, Euro stocks. We have a very low tracking error. And again, you see the relationship between climate and water. Lower water footprint also results in a lower carbon footprint. So companies who manage their water well usually also look at carbon. There are many companies who don't even have a water policy, but the companies who have a water policy usually also have policies and objectives for climate towards net zero in place. On the private market side, I just set up a fiscal sponsorship program fund, which gives investors, specifically impact and venture philanthropy, access to water security and water stewardship ventures that scale clean water solutions globally. We have a first portfolio company. It's called H2 Open Doors, was born out of the Rotary Club network, and it plans to deploy 30 water purification installations for Ukrainian refugees along the European borders. Why do I mention the Ukraine? Because currently, per the UN, there are 1.4 million Ukrainians who have no access to clean water, 4.6 million people in the Ukraine under threat of being entirely cut off from water. So these numbers just released by the UN do not include millions of refugees currently in transition. Lastly, the UN Sustainable Development Goals, Agenda 2030 calls for transforming our world by 2030. That leaves us only 8 years to create a more just and sustainable world, and that obviously includes also sustainable capital markets. So, as I mentioned before to Peter before our summit, it's very, very important that Wall Street becomes or goes green ASAP to serve Main Street, not vice versa, which has been the case historically. So the time to act is now, and I want to end this little presentation with America's founding father, Benjamin Franklin, who was on the $100 bill. And he stated it already in 1774, when the well runs dry, we know the worth of water. And my call to action is to all the panelists, co-panelists, as well as to the participant, let's not get it that far that the well runs dry. Thank you.
Definitely don't want that. So Thomas, how are your indices different from existing ETFs with First Trust, Ecofin, and Invesco?
These indices, the indices that are being tracked by the issuers that you just mentioned, I consider them the first generation of 1.0. They usually started around 2000, and they all trade in the same basket, same constituents. These are usually 40 to 50 equities. It's heavily weighted towards the US and Europe, and these are all water utility companies, water recycling companies, equipment manufacturers. Some of these issuers in their prospectuses describe the equities, the holdings, as companies who have a certain percentage of water-related revenues. What we do is completely different. We look at the global equity universes, and we look specifically at how companies manage their water, and we posit that companies who manage their water well are the better investees, have the longer, long-term potential for sustainable alpha, and companies who don't manage their water well are considered losers. However, we are not as harsh when we rank these companies, and the data is coming from Refinitiv, who identified as the best data provider for water metrics, that if a company currently has no water policy in place, or doesn't report, voluntarily disclose, we don't rank them negative, but we give them basically an A is 0. So very, very different. You have the the 1.0 water funds or water strategies who all invest in the same baskets. They're currently roughly, if you include the European ETFs and mutual funds, roughly 31 billion in this 1.0 water strategy. The largest fund being picked out of Switzerland, which just crossed 9 billion euros. And then on average, you have the investors in the first trust. They're somewhere hovering around 500 million to 2.3 billion. Very different what we're doing. I'm in London here. I just came from a meeting. We're finalizing the first ETF launch, UCITS ETF. So it's a European passported fund in collaboration with a well-known US bank and asset manager. And this fund will track the global index, which has roughly 1,400 constituents, and has a very low tracking error to the MSCI World.
So do your indices trade on US markets, or you have an ETF in the US?
We currently have no ETF in the US. As I mentioned, the first ETF launches out of Europe. Why Europe? Because historically Europe embraced social environmental responsibility for a much longer time. You know, as you probably know, this whole trend, it's not even a trend, it's so socially responsible investing, sustainable finance started in the Nordics many decades ago and is now going mainstream, just coming over with ESG to New York. But the financial capital, the global financial capital for ESG, sustainable finance, responsible investing is still London. So that's why we started issuing in London, and we're currently either with the existing asset manager will, as a follow-up, issue a 40 Act fund in the US. Currently, the strategy in the US is only available on direct indexing, which is onboarded with allindex.com. So investors who are interested in the strategy can do that through direct indexing, direct investing through direct indexing.
So you mentioned a fund for private companies that sound like investing in private companies. You mentioned one. Can you tell us more about the fund, what the size is, what stage you typically invest in, geographically, where you're looking to invest? What can you tell us about that fund?
Yeah, it's a new fund, and it's a very innovative structure. It has been set up together with LOHAS Advisors and LOHAS Capital. These are the pioneers in terms of fiscal sponsorship funds. So this fund operates actually under an existing 501(c)(3) umbrella. Therefore, it provides venture philanthropy as well as donors, as well as impact investors with tax optimization, tax deduction, but also with profit. So there are different structures where you can, it's called split interest, where you can have impact investors and venture philanthropy participate in the returns. We currently have the first prospect. The fund was just basically set up 2 weeks ago, which is H2O Open Doors. Global Water First. These are both ventures that operate globally. They actually set up water installations, water purification installations on the ground. And this is basically a component that's added on to the public equity strategy, because honestly, you know, trading in equities is basically moving money from right to left, even, you know, with advocacy and, you know, advancing corporate investor water stewardship. You do not create any real impact on the ground for people. So that's why this private fund, we're usually looking at seed and Series A. We're also working together with the Milwaukee Water Council, which is can be considered the Silicon Valley of water innovation, water technology. And they have a cohort now this year, which comprises of 9 companies, again, with global exposure and a global footprint. They all have different water innovations, may it be IoT, may it be water filtration, water purification, and they're usually vetted and already prepared to go to revenue. So these are seed and Series A prospects. So,
you know, since, you know, part of what I do at Columbia is help build management teams for startups. What do you look for in terms of the management teams of these startups? How important is that in the investment decision? And you know, what kinds of teams do you look to avoid, or people that you look to avoid in investing?
Well, I've helped for the last few years water technology companies with their financing needs, and it's very challenging. And it's challenging for the reasons that Silicon Valley never understood that water tech is different than clean tech. Historically, the uptake, the commercialization curve is roughly 12 years, which is very long from inventing or basically incepting a new water technology, water innovation to going to market. And the other challenge is that you have only a certain specific water technology funds, and it's an illiquid strategy, and there haven't been many exit scenarios. So these are all things that still speak against the theme, although because of the urgency in water stress and water scarcity, these historic adoption and uptake curves have been shortened. The other challenge is that you're dealing with an environment that's highly regulated, so you have very risk-averse utilities or corporates, which are the off-takers, but that's luckily changing as well. In terms of the management teams, usually you have management teams who are not coming from the water sector, so they've been successful maybe in technology, maybe in fast-moving consumer goods, and it usually takes a while for them to understand that water is a very, very different animal. And so that's a challenge as well. That's why we are strongly focused on companies who have deep domain expertise, as these two companies that I mentioned already, and specifically companies who have been pre-vetted, for example, by the Milwaukee Water Council, and who are going to certain accelerator programs and incubators, which minimizes minimizes the risk and increases the chances of them, going fast to market, and then, being in a position of being most likely picked up by other corporates who are looking for these technologies that can be agriculture companies, that can be food manufacturing companies, all companies, want to lower their water footprint. So this is the key what we're looking for. And since you're at Columbia, one person to ask as well, what I would highly suggest is Dr. Ubmanu Lal, who is director of the Columbia Water Center. He's been in that space for a very long time, and I consider him one, if not the foremost academic authority on water risk.
Great. What do you view as the most pressing problems is screaming out for technology innovation in the water sector?
I would say it really starts with the educational and behavioral change, which is reduce, reuse, recycle. So any technologies and any innovations that help to reduce water consumption, recycle water consumption, and reuse water consumption, everything around that. Next probably would come purification, which is very, very important as well. And then obviously we have huge infrastructure, water infrastructure problems in the US. I don't know if you're aware about that, but according to the American Society of Civil Engineers, we have a 1 trillion, and that's with a T, 1 trillion infrastructure financing gap just for water for the next 10 years. And even though, Congress just passed the bipartisan package, only 55 billion out of that package will be allocated to water issues. So we have very, very pressing water issues. We have infrastructure that's more, in some cases, more than 100 years old in the US. Water is polluted, people flush down their prescription drugs. There's certain instruments that even don't detect yet, microplastics and again, prescription drugs and other toxics and then poisons in the water. So through the whole value chain, there's really need for immediate action. And what needs to happen, because we cannot change the infrastructure that's been in place for 100 years. So there need to be new components such as metering is very, very important, purification, filtering, that needs to be integrated with the old outdated infrastructure to really make a change.
What about water desalinization technologies?
I am personally not a fan of desalinization for the reasons that, first of all, it is very, very costly. It takes a very long time to go through the permitting, which we've seen, with the Carlsbad facility, very, very expensive. And then, there's strong environmental concerns because you have increased salinity because of the brine is going back into the ocean. Specifically in California, you have very, very strong environmental oppositions because it endangers marine life. There's some countries who've been running for a long time on desalination, specifically in the Middle East. But again, the water is also that water is drinkable, but it is dead water. It doesn't taste good. And I always say, if God intended for ocean and salt water to be drinkable, then he probably would have made it that way. So it's a technology from the past.
Thank you, Thomas. I think we're gonna have to leave it there. Thank you so much for your insights on the blue gold.
Thank you, Tim.